Welcome once again to the Lexmall podcast. My name is Marilyn Asantiose and I'm your host. And so in our previous episode, I mentioned that we're going to be looking at tax audits, and today we are going to be focusing on tax audits. In recent times, tax audits have become very frequent. Businesses are receiving a lot of notices from the GRA requesting for an audit for a period of time with respect to specific tax types and all of that. And so today we just want to discuss everything you need to know about tax audits. And I have with me no other person than Mr. William Demishia. He's a lawyer, a tax consultant. He's also a lecturer at the University of Ghana School of Law, and he also co-authored a book titled The Law of Taxation in Ghana alongside Dr. Benjamin Kumbo and Professor Ali Nachia. And I'd like you to join me. Welcome him. Welcome. Welcome to this podcast. We are very honored to have you here once again.
Thank
we
you.
are ready to glean from all the insights that you're here to share with us. We are looking forward to that. Okay. So to start the ball rolling, we just want to know what is a tax audit.
Okay, so in very simple terms, when we say an audit, it's just an investigation into a matter. So for taxes, for tax audits, an investigation into the tax affairs of a person to determine whether the person complied with the obligations as provided by law. That's in very simple terms.
Okay, so what are the types of tax audits we have in Ghana?
So there are a number of audits. Basically, if you want to look at it at the basic level, there's what we call a desktop audit, where GRA will basically pick your filings and then review. And then there's also a field audit where they would actually want to do, as it were, comprehensive audit, come to your premises, pick up your books, and then be able to look at it, take your, as it were, the underlying documents that you use in preparing your accounts, and then verify and make sure that each one of them is up to date. Basically, those are the main types, but even in them, you could have different types of audits being done. Some are specific, which is looking at a specific area. Others could also be general, looking at all tax types. So a number of things inform it. Sometimes they call them special audits and all that. Those nomenclatures are just to show the kind of focus they bring to their particular job when they come to undertake that tax. But in the main, they're either doing a review of the documents you've given them, of the filings, or they're coming and look at the underlying documents to support.
Okay, so I've heard people complain that maybe they are always being approached for tax audits. They don't know why they are being audited and all of that. So I just want to know what goes into the whole selection criteria for GRA when they are when they are about to do tax audits.
So the Revenue Administration Act is quite clear that the Commissioner General has power to undertake an audit into the affairs of a taxpayer, and you can be re-audited based on evidence of either the audit was not comprehensive or there's new information. Now, I would say there's a risk assessment tool that GRA employs usually to determine who are the high-risk clients. That if we do not make sure they are doing that is right, the revenue, it may affect the revenue we are collecting. So obviously, if your turnover is very high, you would obviously be one of those on the radar of GRA. Because if they are able to ensure that you pay the correct amount of taxes, is able to inch up their collection level. And also depending on the industry you belong to. So these are things that inform. So I always say it's a risk profile, a risk-based audit, where they assess the risk of the taxpayer and determine that as for this taxpayer, we have to do the audit. Now, remember that you file taxes on yearly basis. And so ideally, they are supposed to audit your tax returns on yearly basis. But usually there may be 2 or 3 years lag, but maximum within 3 years, they must come back and do an audit to ensure that you're up to date.
Okay, so what are some of the documents that businesses should have in place in preparation for a tax audit?
So usually what the GRA does is that when they write to you, they indicate the document that they would want you to give them. And so the letter informing you of the audit will tell you the period of the audit. It will tell you the tax types they are going to audit. It will give you the name of the auditors who will be doing the job, and also the request for documents.
Okay.
And usually it would encompass all the primary documents you use in preparing, say, your financial statement, because the financial statements are prepared from a trial balance, which is based on a review by your auditor of your underlying documents, the source documents, as we call them. They may want to look at those documents to assure themselves that if it's, for example, VAT, they may want to take a look at the VAT booklet, if you use the booklet, and find out how many invoices you've issued over the period and all that. So basically, what I'll say is that you'd have to look at all the underlying documents that go into the financial statement. If you're using, or if it's VAT, you're looking at the VAT booklets that you've used over the period, your bank statements that you've also had over the period. These are the basic documents that they'll be looking for.
At.
And if there are specific ones, they would inform you about it in the letter that informs you about the audit.
Okay, so once the business receives a notice for a tax audit, what are the next steps, or what should they be looking at doing?
So the business has the opportunity, or be given ample time to prepare for the audit. If the time given is too short, they may request for an extension of time, because usually you would have the tax officers come to the premises of the person and then undertake that, because some of the documents may be bulky. And so if, for example, around that same time, they also have their auditors on site, it may create some sort of difficulty. So usually you can request that they come at another time when you have the opportunity. And given the nature of the plea for extension, they may accede to that. Now, you would have to also then engage your tax consultant, if you have one, or your financial team, and let them put together all the documents you need, your receipts, your tax return payments, all the underlying documents in preparation and in good filing condition for the audit. Because usually what they will do is that they will have an entry conference where the officers will come in, will sit down with you, tell you what they are going to do, how long it will take, all that. And then when they are done with the audit, then they'll have what we call the exit conference. So all these things are things that will be explained to you during the entry conference.
So you already mentioned it, but I just wanted to ask again, at what points do you introduce maybe your tax consultants or your finance people?
Okay, so for your finance people, they'll be the ones feeding the tax officers with the information. So they would have to be in from day one. Depending on the role your tax consultant plays. Some tax consultants provide limited services. They provide just advisory services. Others do the actual filing on your behalf. And so if they do the filing on your behalf, they have primary custody of certain documents which GRA will be reviewing. So they'll play a key or integral role in the entire audit process. So it depends on the nature of the services your tax consultant is providing. But ideally, I always say let your tax consultant be in on the know from day one, so that they can guide the process all through. Because there are some documents and some issues that may come up that with some explanation, it can be resolved even before they issue their draft report.
So what rights do taxpayers have during the audits?
Well, the Revenue Administration Act is very clear. You cannot violate their rights because you're doing an audit. So they have the right to claim privilege to certain documents, even though ideally you can't claim privilege when it comes to tax matters. And in the privilege sense, what you can limit is the, as it were, the sharing of the document. So if they need to assure themselves of certain things and the documents have certain non-disclosure agreements surrounding them, you could have a gentleman's agreement with them for them to view the document on site and make notes as appropriate so that they can make their informed decisions. As I indicated earlier on, you have a right to also inform them of the inconvenience the audit period or the proposed audit period will cause, so that they can reschedule to a more convenient time. You also have the right to have your tax consultant on board and have him help you throughout the process. And so these are rights that taxpayers have, give you enough time to be able to produce documents as and when you request them and all that. These are rights that are enshrined by law that tax officers genuinely follow and uphold whenever they are doing the audits.
So can the GRA go outside the scope of what is provided for in the notice?
Technically, no. Okay. Technically, they are supposed to give you notice of it. So if they are going beyond the scope, they must bring another notice that is able to, as it were, give them the basis for that. Because by law, they are supposed to inform you of the decision to carry out the audit. Okay. And if during the course of the audit, they uncover something that may lead them to go beyond the scope, okay, then the letter should come again. I mean, it's just for formality's sake so that you are notified of the things you need to be able to bring on board. Because that may require you getting additional documentation and additional resources in order to be able to satisfy them. And that's why they need to give you some time and some notice of what is required so you can undertake that.
Okay. So what are some of the mistakes that businesses do is when they receive some of these tax audits? Because sometimes people are very apprehensive when they see some of these letters from GRA. So what are some of the mistakes that they make or they should avoid?
I think the very first mistake is to try and, as it were, prevent the audit from taking place. Okay. And some taxpayers have that mindset. I would always advise against it. If you've done that which is right, you don't mind the auditor going through your books. Okay. And so the idea that I want to stall so that they get frustrated and leave, it's never a good thing to do. Okay. Because then you give them the right to be able to issue what the law calls a preemptive assessment based on their best judgment, which may not reflect the realities on the ground. You may have to pay some deposit when you're objecting, all those things. So I would always say that that is the biggest mistake that you do to want to prevent them from doing the audit. Number two, to also prevent them from getting information as and when they request for it. It's important that within the period you feed them with the information that is required for them to be able to do the audit. And sometimes you may disagree on the extent or how you share the information. As I said, you can come to a gentleman's agreement when those things are covered by certain levels of confidentiality as to how that information is extracted for purposes of the audit.
Okay. So what exactly happens at the exit conference?
So at the exit conference, they are supposed to tell you their findings. Okay. Give you a briefing of all that they have done, the documents they've reviewed, the documents that they requested for, they received, they didn't get, all those things. And then tell you their findings. Oh, we found A, B, C, D, and based on that, this and that and that. And usually, at the exit conference, they're supposed to give you an opportunity to respond to some of the findings that they have made. And so if the responses are good enough, then you don't find those things in the draft that would come. So usually the draft, and sometimes it also depends on the procedure. Some will circulate the draft to you before they come in for the exit conference, which is ideally the good thing to do. Others don't give you a physical draft, but during the conference, they let you know what they found, and you can discuss. Either way, you can't. Either way, I would think that circulating the draft ahead so you can have the opportunity to go through and know that it's good. But at the exit conference, you're supposed to know what and what they found, and when you can expect the formal audit report, and if there's an assessment, when you can expect that to take place. So that's basically what they do, just signing off from it. And if they have any documents, they have to get back to you because they took it from you. At the exit conference, you sign off. Everybody signs off to say, okay, I took these number of documents from you, I'm returning them, and we are signing off so that you have them in your hand. So these things are supposed to take place during the exit conference.
Okay, so what happens if the taxpayer disagrees with some of the findings during the exit conference? What happens?
Yeah, so if you disagree, you're supposed to let them know your point of disagreement. If they accede to the argument you've made, as I said, it will not find itself in the report that will be issued. If they do not, it will still find itself in the report, and you have to go to a formal procedure to, as it were, object to it. So that's basically what happens during an exit conference.
Okay, thank you. So all too soon, we've come to the end of another episode, and I just wanted to give us some last words before we round up.
Okay, so I would say that tax audits are not scary. They are just for assurance purposes to ensure that we are doing that which the law requires us to do. Don't be too apprehensive when you get a letter from the tax authority that they want to audit your affairs. if you've done the right thing, it should embolden you that they should come and give you the seal of approval that which you've done is right. Make sure that you get guidance from a tax consultant during the period of the audit, so that at the end, you can be able to save yourself from a number of the things that may come, that may bring you interest and penalties.
Okay.
Thank you.
Thank you for sharing these insights with us. I'm sure you've all learned a lot from what has been shared on tax audits. So if at any point in time you receive a letter from GRA requesting an audit, you shouldn't panic. Just go ahead and engage your tax advisors or consultants and go ahead and provide whatever documents they are requesting for, and don't be apprehensive about the whole process. Just take it easy. So all too soon, we've come to an end of this episode, and I'd like you to subscribe to this podcast, share, and like it as well.